Thanks for joining us. My name is Ibrahim Sani. This is one of those interviews that I'm really looking forward to because we'll be talking to two individuals right now, the CEO of MAVCAP, Shahril Anas, Hassan Aziz, and of course Abdullah Hidayat, a VC of Ficus Capital. They are in town and they are in the studio to explore to us the kind of opportunities when it comes to venture investment, particularly in the realm of ESG and Sharia investment. Gentlemen, thanks for coming over to the show. Let's start with you, Shahril, on MAVCAP. There's a lot of, opportunities that is in the market right now. But one has to be argued that when we look at the funding kind of stages in Asia and in Malaysia and Southeast Asia, it doesn't seem to have a kind of a uniformed approach. One would argue that Series B, Series C might not have the necessary investments there yet, but pre-seed and seed, there's a lot of investments or capital there. First of all, is this kind of notion even real, I suppose? Is there more capital being allocated to pre-seed and seed and not later stages in funding?
Okay, Assalamualaikum and very good morning, everyone. For MAVCAP, we are here since 2001. We do direct investment for the first 10 years. We started off fund of funds in 2013. So meaning to say that we have a pool of funds via other LPs or investors, be it domestic or international. And we have a GPs or the fund managers that are actually managing it. The reason being that right from the onset from 2013, most of our funds are actually into pre-seed and seed, maybe some into Series A. Because we need the funnel for later series, right? We currently have 14 funds running. We exited one international fund because we invested back in 2013. This is the right time, I think, for 10 years. And be mindful that VC is actually for a long-haul investment. Don't forget about dividend. It's all about capital gain. We are actually focusing on capital gain. And as you said earlier, that we need the funnel. Meaning to say, our sweet spot down to 50,000 US, up until $5 million US dollars, maybe for up to Series A. So in the sense that, I think we're talking about maybe post-COVID. There are, I think, companies or founders that actually valued the company during COVID when they actually pivoted towards their advantage. And most from our portfolios, most of our post-COVID champions, heroes, is actually turned zeros now because most of it's especially e-commerce and logistics, whereby these e-commerce activities slowed down post-COVID.
And as sad as it sounds, that's why you have a diversified risk portfolio. That's why you rely more on not just thematic, but of course cross-sectional sector.
Agnostic,
agnostic.
Agnostic,
but investors and LPs still rely on, say, for instance, IRR or multiple investment invested capital or MOIC. These are the kind of matrices that I guess LPs look at. Do you feel that this kind of communication is still yet to be made to LPs currently and, of course, prospecting LPs, or do they still not understand the idea of venture capital?
I think for corporate VCs or corporate LPs, they understand it because in the VCs, the structure is always 8 + 1 + 1.
Yeah.
The first 2 years is actually fundraising.
Yeah.
But during that first 2 years, they need to deploy as well. Especially those anchor investors like MAVCAP. When we write in we issue the first check, we expect them to raise as well as invest. The first 4 years is actually honeymoon period for them because they have the money, the founders came to them and they do investment, right? I think the challenging part will be the next 4 years when they want to exit. Who going to buy our companies, number one, at what price? And for LPs, just as I said, the IRR and whatnot. And be mindful that we were talking about corporate, which is, even in Malaysia, it's tough to get them to commit. The reason being because board members stays in that particular company for only 2-3 years. They just don't want to sign their life away, saying that, we approve this commitment, but 7 years, 8 years down the road, they won't know anything. Those who came towards the end of the term of the VCs, they will say, that's not during my time. That actually the challenges faced by not only Malaysian, but all over the world.
But there's so many other opportunities for you to exit, including secondaries, PE.
Yes.
Are you guys open to that kind of idea?
Yeah. In fact, the first exit we had through secondaries. But then again, you have to absorb the kind of discount that being offered to you.
I mean, you have to.
Yep.
Otherwise,
Yes,
you just have
yes.
to sit in until IPO if
Yeah,
it ever
yeah,
happens.
yeah. You are right. You're right. Yeah,
Let's
you're
move
right
to Hidayat with Ficus Capital. Let's talk a bit more in terms of what Ficus Capital is all about and the interrelations that you guys have with MAVCAP.
All right, thank you, Astro. Thank you, Ibrahim. FICUS, we were established in 2018, and at the point of establishment, we registered with Security Commission. We brand ourselves to be world first Sharia-compliant venture capital in the world. And then we've been doing 2019, we thought we're going to do a bit of market study to really understand, to perspective the market, then to launch the fund in 2020. And 2020 being a challenging year, then we managed to launch our fund 2021, and that is when MAVCAP came in. MAVCAP be our anchor investor. MAVCAP pledged to invest with us about 20 million. And the first fund that we're doing FICUS Southeast Asia Fund, whereby we focus on technology company across Southeast Asia, and we focus from pre-A to Series B. We don't really do seed. The hard line for us, any company that coming to us, they must have revenue. If they haven't got revenue, we don't even look into them.
What is the size of the Ficus South Asia Fund?
We hope to get it to 60 million. That's the target fund size.
Ringgit.
Now we are ringgit.
So
now we
15
are
million USD.
15 million USD. Now we are about 20 million ringgit, and continue our raising throughout this year. And the ticket size for each investment, we are looking at 500 ringgit to 5 million ringgit. And just like what Mr. Sharif said earlier, for VC, when we do our prospecting in 2019, we thought of, should we go to the later stage or should we go to early stage? Knowing that the funnel, the pipeline, especially on Sharia investment, is not really there. So that's why it's better for us to start at the early stage. Then we build it. Then hopefully the next fund going to be a bit more for mature investment.
All right, let's talk about the landscape right now when it comes to ESG and Sharia. Do you feel that, in a way, you're limiting yourself because you're creating a Sharia-compliant fund? There's a lot of other questions surrounding it. What is so non-Sharia about other VCs? Why must you create an ESG fund or a Sharia-compliant fund? What's the, I guess, upside when you go to LPs and other investors that come into the fund and say, this one comes with a better MOIC or an IRR? What's the value proposition, I suppose?
I think, first of all, let me take from the Sharia standpoint. Sharia actually been had a lot of misperception regarding Sharia investment or Sharia finance as a whole. Because Sharia finance, mainly people look at Sharia finance from the exclusivity standpoint. But in the actual sense, being Sharia, you are a bit more inclusive rather than exclusive. I give you one example, Ibrahim. If you take, a very simple example of restaurant. If you have halal restaurant and you have non-halal restaurant, the likelihood of halal restaurant to have more customers are there, particularly in our part of the world. So that is the thought process on the business model. When you look into Sharia, you look into two main things. The first one, it is the business activity. The business activities, you rightly said, most of the companies, particularly in technology sectors, they are Sharia compliant by nature. Because the very, very concept about Sharia is like, you are Sharia compliant until you are proven otherwise. The second part, which is a bit more tricky, which not many VC will be able to do, it is the Sharia structuring, the instrument that you use. Most of the VCs are very used to interest, compounded interest, and then, very fixed redemption price and whatnot. For us, if we believe in the company, so there will be no interest element in our instrument, and then our redemption conversion will be at the market price. In return, we managed to attract a lot more good companies because the contract that we're offering to them is a lot more fairer compared to non-Sharia compliant VC.
The idea behind Islamic finance is also to not profit from multiple folds of, revenue. But when you look at some of the high-profile VCs around the world, including Sequoia, including Lightspeed Ventures, including many others, you're looking at 3,000-fold, 2,000-fold, especially if they come in as an early investor on Snap, for instance, or on IG or WhatsApp. you're going to see them coming in at, you know, a check size of 1 million and then exit at about $500 million. Is this not excessive profit taking?
For me, that should not be any problem with Sharia when it comes to you invest. For example, if you invest in 1 million and you go out at $500 million, that should not be any problem as long as it is not fixed. You know, because Sharia, as long as you don't fix your exit, you'll be at the end of the day, you don't take money from the founder. When you exit, perhaps like you mentioned earlier, you exit from the secondary fund or whatever. So then it'll be fair. It's no issue when it comes to Sharia.
I think I would like to jump in terms of going of $500 million to 1 billion and whatnot. It's all about valuation, number one. And you are actually a smaller stake in the bigger pie.
Yeah.
I think for right from the start, when we invest maybe $100,000 US, our stake could be what, 10-15%? And we might put in our board members. The challenge is actually to meet the milestone at that particular stage and have another round of financing. The other round of financing is very, is great actually to the company as well as the investors because of validation. We want that validation.
All right.
And we want that it's not us that actually doubling down, it's other investors actually invested into the company. We don't mind having a smaller stake, but with a bigger pie.
Let's talk about the role of MEFCAP in venture capital. Because when you look at the role of government, I suppose, is to bet on infrastructure, on long-term projects that might give direct benefit to the people and many more. But the profile, the risk profile of venture capital is extremely different from these kind of public goods kind of service. And being a ministry, being an agency under, I guess, two ministries that overlook you, including Ministry of Science and Ministry of Finance, how do you then justify the kind of public money that is being invested in MEFCAP into these kind of investments like VCs and the likes?
Okay, what we assume ourselves, I think we are doing it for the government, because the government cannot do it purely on public money, dollar to dollar, right? So MEFCAP, being a GP to the government, I think the first task is actually to
Actually,
raise.
that's a very good, I guess,
analogy.
profiling.
Yeah. Being a GP to the government, the first task is actually to match whatever ringgit, whatever resources that given to us. Our record says that now, every 1 ringgit given to us, we managed to raise 4 ringgit. So meaning to say, and the 4 ringgit is not actually all domestic. 80% of them is actually international. We have the like of Alibaba, the like of GS. You have GS shop here, right? But GS shop in Korea is actually the like of Renong. It's a conglomerate. So that's actually on the fundraising part. The fundraising is not that tough from MEFCAP side, because they can consider us, if you are going to China, even part of Asia, SOEs, state-owned enterprise. So the risk profile is not as much because we have the government to back us up. The challenge is actually to look upon great GPs, not good GPs, great GPs. And if we are purely into profit incentive, we wouldn't be looking at factors at all. But we need to do developmental role as well. So as a GP to the government, apart from profit making, we also want to nurture our own internal domestic fund managers. So we back first time local fund managers, the like of Ficus. And we did it with Vin Capital as well, our graduate from MEFCAP. Now raising second funds. And we have best of both worlds. Gobi from China, Shanghai, and 500 from the Silicon Valley. What missing is someone smack in the Middle East, and we are talking to them now, and the European side. So meaning to say, the government may need to provide everyone with a great infrastructure. MEFCAP, as a GP to the government, try to match make which kind of technology benefited Malaysia, and maybe ASEAN, in the next 5 to 10 years. Because you must remember that when we invest, not for today, it's for tomorrow.
The whole element of GPs, at least local created GPs, is to tap into funds that might not necessarily be normal for us to go after, right? LPs through family offices in Europe, GCC money, China money, Do you feel that, both of you, I want to hear both of your point of view in terms of our GP hunting for LPs in these kind of geographies?
If I may say, I think Malaysia, if you look post-98, most of Malaysia company, they have stack of cash. They have stack of cash. Some or other, their cash reserve, they built cash reserve. If you look into listed company in Malaysia, they tend to keep a lot more cash now compared to before. Even now, if you go to most of the listed company, big corporate, they have cash. The issue is how can we draw that cash and entice them to invest in venture capital. Actually, Ibrahim, since 2017, 2018, government have announced that they're going to have the tax incentive for whoever corporate to invest in VC fund that's registered with Security Commission, they'll get tax exemption. But since government announced that in the budget 2018, that thing only has been materialized and endorsed by our LHDN April last year.
Yep.
April last year. So I think April last year until now and going forward, then you have a new landscape for corporate Malaysia, for companies, private companies to come and invest, because they know for the fact that they invest, apart from helping them to explore new future market, they'll be able as well to get some tax exemption up to 20 million investment.
So when you look at, say, for instance, a typical profile of a Malaysian corporate, maybe one in oil and gas, a few in banking, so they become LPs in a way to a local GP or a local VC, pump in 20 million, maybe up to 20 million, and then the tax incentive for profits made out of that investment is exempted.
No, they got 20 million exemption from their profit.
Oh, 20 million exemption from that profit.
Up to 20 million.
Up to 20 million.
Yeah.
So, of course, the size of investment can be any.
Anything lower than
And, of course, is this a one-off kind of tax exemption? Or?
One-off.
Yeah, one-off. Yeah.
One-off.
One-off. How do you feel this has been accepted by Malaysian corporates? I'm sure they're aware. I'm sure there's a financial controller everywhere in these corporates, CFOs and the likes.
We've been talking since April last year, actually. That's why I've been, approaching a lot more of them. So they're not that aware, because this is not the normal business as usual for them, something new. So the next part for them is they need to convince their board, like what Shahrid said earlier. It is, to take a bit more risk. Because investing in VC compared to putting that 20 million in FD, the risk profile is completely different.
Yeah, you get 3%.
Yeah, 3%. Confirm. Yeah.
Principal guarantee, you name it.
Yeah. But I like to draw some comparison. I remember when I had a short stint in Japan, Ibrahim. What happened? The big company like Sony and the like. What they do actually, in order for them to identify the next or future technology, they don't go and buy themselves. They appoint GP or VC fund.
Yeah, because they're not familiar.
Yeah. They're familiar, and so that those companies will not get scared of them.
Yeah.
So buy on their behalf and then pass it back. So that's some kind of education that we need to do with our corporates in Malaysia.
Okay. See, this is the problem with. Sorry, back to my earlier question.
Yeah.
So you have no desire, I guess, to go after LPs from other geographies.
We do, like I mentioned earlier, we do. But for the first fund, we focus more, because it's Sharia ESG related. We focus more on familiar investors, so to speak. So we talk to the Middle Eastern corporates, and then focus on Malaysia, and we had some chat with Indonesia.
This the South Asia Fund 1, is a closed fund?
It's closed-end fund, 7 years fund.
Okay,
7 years fund.
coming back to your question of LPs from outside Malaysia, non-domestic.
Yeah.
Okay, first, if you meet corporates, sophisticated investors, they would deem that what they have now in their coffer is dumb money. So they need to, in terms of capital lying around everywhere, and the notion of money has to go somewhere is what they are taking. Meaning to say, the dumb money should turn into smart money. The only way to do it is investing into technology. The question is, which of the GP can actually deliver? And for the first-time GP, I think it's tough.
Yeah, it's a chicken and egg argument.
Yes, it's tough, because you don't have the track record. People cannot look at your performance. What you can say is, during my previous life, This is what we were doing.
Yeah, so you have to rely on your seniors.
Most of the time,
Yep.
we are the one fronting the GPs to raise as well. But the only question would be that the reason why MAFCAP still needs seed money from the government is, what is your skin in the game? You want X amount of money from us, what is your contribution? So that is where I think we put in a little money to entice this capital to come across Malaysia.
Yeah, I mean, I have to concur on that. You know, since MAFCAP came in, right, when we talked to a potential investor, we said that we have MAFCAP as our anchor investor, then the conversation start to be a bit more open. That's really helpful. So I think I want to go back to your point. You said that typically government invests in long-term infrastructure project. I see role of MAFCAP is to come out with that, you know, SME infrastructure, SME financial infrastructure. Because you look into Malaysia, I mean, contribution to GDP from SMEs is quite big. So what we need to make sure the SMEs and tech company to have proper financing and investment infrastructure. And MAFCAP come in to really help government to do that, to do just that. Because Malaysia, we have not got, apart from MAFCAP, we haven't got any big local VC. Like Sharin mentioned about Gobi from China, 500 from
But farmers managed to raise from Khazanah, for instance.
Yeah. With the help of MAFCAP as well. Because some of the fund, we either co-GP or co-manage.
So how serious is the Malaysian government in terms of making local GPs born coming out of Malaysia?
I think one of the...
Because I have an inferiority complex. When I look at Singapore, I feel so small.
Not Singapore actually rely on us in terms of founders.
Yep.
The reason that the founders, because one of the trait that we need from founders is to be resourceful. If they cannot get money from us, money is lying around in Singapore. Definitely, grab for that matter. Okay, coming back to how serious the Malaysian government, I think the restriction to invest, not to allow us to invest overseas is actually the impediment now. Because most of the LPs wants the funds to be domiciled offshore. 10 years is long enough. Talking about the risk right now, I don't want to have a Singapore.
I mean like Delaware or Cayman or...
Yeah. But I think most obvious will be Singapore because of their tax incentive.
Not even Labuan, huh?
Labuan, they need 12, from my experience, they need 12 to 18 months KYC. Yes.
Can't speed things up.
BVI, Cayman, Singapore, Delaware,
You name it.
They're okay with that. But Labuan, they may need, from our experience, 12 to 18 months to do all the KYCs.
To take that point, right, Ibrahim, actually, what happened when we do our first fund, when we do first year 2019, we try to scout and understand the market. At the end of the day, we decide the first fund, we will go for Southeast Asia, not Malaysia alone.
No, I agree.
So,
you have to because your idea here is to bet on high-performing founders.
Yes.
And if you're limiting yourself on geography, then you're not really fulfilling your own thesis.
Yes.
Yep.
Yes.
But with this kind of Southeast Asia focus, does it contradict with the government trying to...
The reason being because 124, and I think it is so-called mandatory that our portion of the money, of the contribution, goes to Malaysian company.
That's okay.
Yes.
Yeah.
And
That's okay, meaning you bring back capital to us.
Yes.
Yeah.
But find capital elsewhere.
Yep. Be mindful as well, the like of Qasem, we back them up 5 times. When the last raise from our side is 10 million US. We cannot go, we don't have that kind of dry powder to actually support the like of Eric and the team to go forward. So when they raised the last 40 million and the brouhaha about they begging the government to put in money, it's not true. Actually, they are saying to the government, hey, get Malaysian to invest in our company rather than the Singaporean. And coming back to your Singaporean story, right? I don't know whether to be on the record.
Put it on the record. Why not? Let's face our limitations so that we can improve ourselves.
We have people in Singapore want to put in money together with MAFCAP, open the satellite office here, but because of the restriction, we missed one. We missed one deal last year. We put in, committed about, already been approved by the board, done our DOD.
As in MAFCAP board.
Yeah.
Yeah, MAFCAP board, yep. We committed 3 million US The fund size is 70 million US, and this GP committed 25% of that 70 billion into Malaysian company, US dollars. But because of the domicile, investment domicile or fund domicile in Singapore, the government or MOF didn't allow us to do that. So we missed one opportunity. Even now, even this year, we already approved 3 investment. All of that, even Victor, Vin Capital, actually opts for either Cayman or Singapore. Because it's tough to entice foreign capital coming in to have a Sinan Berhad, whereby, first about the risk, and profit repatriation, getting tax after this kind of risk. So I think it's not conducive for Malaysia to have this kind of restriction for VC. I think just for VC, the rest of the sector, I wouldn't know much.
No, I really think that the VC landscape in Malaysia needs to be looked at quite seriously.
But if you want to champion entrepreneurship and startups,
because this is the firepower that the founders need.
Yes.
But I think since April last year, go back to the tax exemption I mentioned earlier. Actually, the tax exemption, it came with 3 things. The first one, tax exemption for investor to invest. The second, it is tax exemption for the fund. Whatever profit that fund make will be tax exempted. The third one is the manager. The fee that manager get will get tax exemption. But the tricky bit, Ibrahim, is like for the tax exemption for the fund has to invest, the portfolio has to be 50% minimum in Malaysia, Sinan Berhad company. So this creates a bit of restriction. For example, our fund, we have invested in one Malaysian company, one Indonesian company, equal amount. For example, if I sell, I disburse, I divest my Malaysia company, then my fund will not be entitled for capital the tax exemption anymore. So this kind of thing, the restriction doesn't come from MAFCAP. The restriction comes from the Act, the Security Commission Act, and whatever for that.
Okay, what's the ask then, Hidayat, right now on my show? What do you want people to know about you?
So I think, first of all, I'd like to, bring the public, bring even government to look a bit more strategic when it comes to venture capital. And we should really aspire to have our very own private venture capital that known globally. The like of you mentioned Sequoia, 500 and Gobi. That's what we aspire to be. That's what Ficus aspire to be. We aspire to be
an enduring VC firm.
And the enduring VC firm, the firm that not only be known in Malaysia. That is why Ibrahim, for us, we look into what are the niche. We look at Sharia and then we look at ESG Islamic. That's the niche that we want to be known, and that's something that, in order for us to get that, we need to have a lot of support. From the government, from the corporate, from the GLIC in that manner, and then from the JLC as well, to look at their investment, to look at their dumb money, apart from make it more smart, have a bit more developmental focus, so that hopefully in the next 5-10 years we'll be able to see that we are, there is a Malaysia VC that in the same line as 500 Gobi or Sequoia.
Fantastic. That was Abdullah Hidayat of Ficus Capital. He's the managing partner there. Earlier on, you heard from Sharianas, the CEO of MAFCAP. If you want to learn more about this, just head on to astro.com. Look out for more information like these that can be found there. My name is Ibrahim Sani. Catch you in the next one.